Hi, everyone. Welcome and thank you for attending MOLC's webinar on PRI reporting. Whether you're a current signatory or thinking about becoming a signatory, our goal here is that you learn about the PRI reporting process, the value of becoming a signatory, the challenges associated with reporting, and how PRI's evolution may or may not impact you. I'm Emily. I am a vice president here at MOLC and have been at the firm for about 4 years now. I helped oversee the creation of our UN PRI reporting initiatives that we have here at MOLC and have worked on about 1/3 of the UN PRI projects that we've worked on over the past few years.
My name's Nicole. I'm also a VP and specifically in our private equity practice. I've been with the firm for about 6 years as of this coming July. I work with a number of our clients, including on UN PRI reporting. One of them you'll be hearing from here soon, Amanda from Avista. And a little bit of background on MOLC. So we are a dedicated ESG advisory firm. And we support our private market clients and their portfolio companies with really everything ESG. So everything from ESG strategy to data reporting, and of course, UN PRI reporting as well. And so another big thing to flag too is that we were acquired by SLR in late last year, and SLR has a really, really large global footprint and has really expanded our technical capabilities as well. And a little quick note too is that this specific portion of the presentation is pre-recorded, and we will also have a live Q&A towards the end as well. A little bit of an overview of what is to come. I'm going to provide some kind of introductory remarks on the UN PRI, and then I'll pass things over to Emily to get a little bit more in the weeds. We'll hear from Amanda out of Vista here shortly, and then of course we will also have the live Q&A. All right, in terms of the UN PRI writ large, so the UN PRI has really become the preeminent, ESG reporting framework and independent industry group within the last few years. There's already over 4,000 signatories in 60 countries, really across different asset classes. And the primary goals of the UN PRI are really to understand the different investment implications of ESG factors, and then also support the network of UN PRI signatories integrating ESG during the investment and ownership periods. In terms of the requirements for UN PRI reporting, there are 6 key principles that are kind of pretty broad-based about integrating ESG into your investment processes. There's also a required maintenance of a responsible investment policy that covers at least 50% of AUM. And the big thing that we'll be talking about here today is the annual reporting process. And in terms of how the modules are scored, each individual module is scored individually, of course, and these are graded on a curve based on your respective peer sets, based on asset class and also AUM. In terms of our relationship with UN PRI, as Emily noted, we have supported so many different firms with UN PRI reporting, everything from the preemptive kind of gap analyses to the actual reporting itself, and also supporting with program improvements as well. We have a number of ongoing touch points with UN PRI throughout the year, and we also have a number of tools to support with reporting, to ensure that this process is not super burdensome for you all because, it can be quite extensive. So we have a number of ways that we support on that end as well. So in terms of some of the benefits of being a signatory, so lots of limited partners, this is a big priority for them. And, becoming a signatory is a huge marker of program maturity and also your commitment to sustainable investing. And so I have had a number of clients who have had investors or limited partners not want to invest if they are not signatory. So it's really become table stakes for select LPs. And even without that, this can still be a competitive differentiator during the fundraising process. But outside of just fundraising and adhering to stakeholder expectations, the UN PRI also provides this third-party, objective assessment of performance, and also this kind of broader network and ecosystem of other signatories who, have made the stand that they are committed to responsible investing. So there's a number of different benefits associated. So I'm going to provide a little bit of context without getting too in the weeds here on the respective reporting framework. And so I'll talk first about a couple of the mandatory modules that are, applicable across all signatories. So firstly, one of the longest modules is the policy governance and strategy module. Asks a lot about policies as is expected given the name, climate, and kind of your broader ESG integration strategy. This is a scored module. Similarly to the confidence building measure or CBM module, this is more of an assessment of, how you have undergone kind of a review of your reporting package writ large. And then outside of this, there's a few other components that are not scored. So firstly, the senior leadership statement, which is a free form, overview of, your firm's commitment to responsible investing, and then also your firm's sort of improvements over the past year. And then there's a new module or optional component here called the other reporting obligations, where you can, disclose other frameworks that you might be aligning to, and then also the organizational overview as well, which, is really about kind of biographical information for your firm or specific investment strategies. And this really sets up which modules are applicable throughout the rest of the kind of reporting package. And then in addition to these broad-based modules, there's also this asset class specific modules. And so depending on your specific investment strategy, this unlocks specific additional modules. And so if you're completely 100% private equity, for example, you would only have to complete the PE module. However, if you have other investment strategies that are either 10% of AUM or above, or 10 billion in AUM, then this will potentially unlock another reporting module. So for example, I have some clients that are getting to that close to that 10% on the listed equity side. And so that's definitely something to monitor, because you might also need to report under that module as well. Another big thing to flag is that there are certain core and plus questions associated with UN PRI reporting. So only the core questions are scored, and then there's options throughout all of the modules to really disclose more about your program. So with that, I'll turn things back over to Emily.
Thanks, Nicole. And in determining when and if to become a signatory, it's important to understand what the PRI assesses within its reporting. PRI reporting, as Nicole had alluded to, focuses on policies and practices both at the firm level as well as the asset class level. And PRI in general is more of a qualitative reporting exercise than many of the other reporting frameworks out there. Diving into the programmatic elements covered within PRI reporting, at the firm level, this really focuses on content within the ESG policy, firm level strategy, including incorporation of sustainability outcomes in the investment process, climate strategy and reporting, and portfolio stewardship efforts. At the asset class level, reporting really teases out how firms conduct pre-investment screening and due diligence, post-investment portfolio engagement, as well as exit planning, among other factors. Recognizing that content of reporting is not the only factor to consider, the other primary points to consider when becoming a signatory relate to fees, scoring, and timing. Oftentimes, firms sign on to become a signatory due to LP pressure, but don't fully understand the resources needed to complete ongoing reporting, both time and financial. PRI scoring is also based on peers, as Nicole had mentioned. Thus, as peer firms continue to become more sophisticated, the bar continues to rise on what is considered lagging or aligning and leading. And once a signatory, firms must decide how they want to complete reporting, meaning what their self-disclosed reporting timeline will be, and if they will complete optional questions and modules. And as we've alluded, there are many challenges associated with PRI reporting, and we work with dozens of clients annually to help navigate a lot of these challenges. The challenges typically fall within three buckets: time and project management, interpreting vague PRI language, and prioritizing program improvements. With regard to time and project management, PRI reporting can be a very long process of information gathering, response approvals from various folks across the firm, and uploading responses directly into the portal. And given firms tend to evolve their programs over time or their portfolio changes year over year, it's not a simple copy-paste exercise year over year, and instead really requires that careful review of existing practices for first-time reporters and comparing year-over-year practices for signatories who have reported in the past. This means reviews from multiple internal stakeholders and potentially external stakeholders like outside counsel or an external auditor. PRI's questions are also quite vague and open to interpretation. And although PRI has a glossary of terms with definitions, those definitions are also quite vague, leaving more questions than answers in many cases. PRI's reporting team can also be slow to give a reply, and even then, sometimes their responses are quite vague. Thus, having a resource to help interpret PRI can really be beneficial to that process. This goes for firms who are conducting a gap assessment or developing responses outside of the platform. Throughout all reporting modules, many questions may be gated in or out, which leaves another question of what questions will be required to report, either during that initial gap assessment process or that formal reporting process. All in all, it really can lead to a lot of difficulty and time-consuming processes to really help unpack what PRI is asking for and what is required within reporting. And then once PRI releases its reports to firms or firms conduct a gap assessment, it's challenging to know what to do with the results and what to prioritize. There are certain gaps that may be really easy, quick wins to address in the short term, like updating the ESG policy, whereas there may be larger, more time-consuming gaps that will not be a priority in the short term. So without the context of what peers are doing, it can be really challenging to know what to prioritize and how time-consuming and resource-intensive some of these potential gaps may be. And now, once a GP chooses to become a signatory, they've gone through the process of applying to PRI. Their first year, they have the option of conducting a voluntary private reporting. We always recommend that firms conduct a PRI gap assessment ahead of becoming a signatory or in between the time of becoming a signatory and conducting their first reporting period, whether that be voluntary or private reporting. Gap assessments really provide GPs with an understanding of where their program is and how it stacks up compared to peers ahead of getting that formal score from PRI. And within that gap assessment, really best practice would be to get an estimated score and to identify those areas for improvement, specifically those that are easy wins that can be accomplished ahead of a firm's first year of public reporting. Importantly, voluntary reporting provides stakeholders an opportunity to run through that reporting process, which is why we would always recommend that firms go through that initial process. But the one caveat is that LPs could still ask GPs for their PRI score, even if it's not public and their first public reporting year. And then lastly, once a firm has gone through that initial voluntary reporting process, or they're in that second year of being a signatory, they will be required to conduct public reporting. And this means a firm's responses across each of its reporting modules will be made public. The specific scores across each of these modules are not public, but the actual answers there within are made public. As you can see, PRI can really be a full year process. For existing signatories, Q1 is an opportunity to make changes to a firm's ESG program ahead of that reporting during Q1 or Q2, which could be based on the results of the previous reporting year or based on the gap assessment. The reporting cycle has changed over the course of the years, but in recent years, the live reporting process has been between May and July, though the exact dates for 2025 have not yet been released. We anticipate that they'll be released in April, but PRI hasn't given us clear guidance on when that formally will be open. And then given reporting modules are released early in the year, they're typically released in February. We recommend that firms get a head start on reporting as to not scramble to complete reporting in the really busy summer months. We often get started on reporting with firms ahead of when the portal is officially opened in May in order to allow for ample time for internal review and those approvals. Once reporting is in, the transparency reports, which outline each of the questions and each of the modules and provide question and module specific scoring. Those are typically released in November. And from there, firms should then review the results and how they compare to peers and determine areas for improvement and changes ahead of that next reporting cycle the following year. So as you can see, PRI really can be a time-consuming process that doesn't just run between May and July, but really needs some attention throughout the course of the year. As many of you know, PRI is constantly evolving and has been soliciting feedback from signatories over the past 2 years to understand how PRI can better fit within other existing reporting frameworks, as well as how PRI can better support and provide resources to signatories related to ESG and responsible investing. As a result, PRI intends to roll out progression pathways starting within the next 2 years, which will be a voluntary reporting aspect that firms will have the option of 3 different pathways, which will have 3 associate levels associated with them. These are broadly, these 3 pathways include those seeking primarily to incorporate ESG factors, those aiming to address drivers of sustainability related financial risks, and those seeking to have positive real world impact alongside financial goals. PRI has confirmed that the current mandatory reporting that Nicole and I have been speaking to during this webinar will likely become the foundational mandatory reporting going forward once these progression pathways are released, and thus there shouldn't be significant changes to PRI reporting modules going forward, allowing for a lot more consistency. And with that, I'll now turn it to Amanda and Nicole, where they will have a Q&A.
Great. Thanks so much for joining us, Amanda. If you want to do a brief intro.
Sure. Thanks, Nicole. Hi, everybody. I'm Amanda Haravi. I'm a managing director at Avista Healthcare Partners. I run investor relations and ESG for the firm and have been with them for 20 years now. Prior to that, I was at another private equity firm and I started my career in investment banking. We have been a Malk client for just over a decade, and they really have been instrumental in getting our ESG program to the place where it is today. So happy to be here.
Very much enjoyed working with you over the years as well. So my first question for you is, when did Avista first become a UN PRI signatory, and what were the reasons for that?
Sure. We officially became a UN PRI signatory in 2021. And the main drivers for that were really, increased pressure from our European LP base, who think that being a UN PRI signatory is really table stakes. It was something that I was thinking about for a number of years, but it took a while for me to get buy-in from partners to officially become, a signatory and all that entails. We saw that the momentum was really, building in the U.S. as well, and think that became a signatory and have never looked back.
Definitely not alone in having kind of LPs be a big driver there too, and yeah, it definitely is quite a commitment, or can be. So that definitely resonates. So what was your process, from the onset of when you first became a signatory to your first report? What did that look like for you?
Well, we tried to start as early as possible so that the reporting process, which I had heard was onerous, was not going to be nearly as onerous as it was laid out to be. So we had Malk do a gap analysis for us of our program as it related to the scoring, so we could really understand what our program was lacking and what we might be able to put into place before we actually had to report and to help increase our scoring. But we still left a little bit of room for improvement, so that the next time we scored, we had that year-over-year improvement, which does help your score. Malk, you guys were great. You provided me with a ton of support and made the process, as painless as possible. I mean, it is a lot of data to gather, and it is a lot of answers to go through, and but you really helped us maximize our score and make the process as easy as possible. So thank you.
Yeah, no, of course. And I know you touched on this a little bit, but what are some of those specific things that you did in response to either the initial gap assessment or your first report?
So in regards to our ESG program itself,
Yes.
so I think the reporting really made us realize that there were things that we were either thinking of doing or doing, but maybe not on a regular basis, that if we implemented across the board would improve our scores. So we now share all of our monitoring reports with potential buyers of our portfolio companies when we're exiting something. That was something that we had been thinking about for years, but never had really done systematically, and now we do. We also create an annual ESG report and share that with our LP base. And that's something that, again, I had been wanting to do ever since I saw, Carlisle's ESG report like back in the day. And I'm like, oh, that's so great. I want to do one of those. But now, ours is nothing like Carlisle's, but at least it does, convey some good information in a really like nice packaged way. And then we also partly this is because of UN PRI, but this is also partly because of our participation in the EDCI project. But we also now collect Scope 1 and Scope 2 emissions information from all of our portfolio companies.
Yeah, that's great. And yeah, definitely a lot of reasons to be taking those steps too. But, there's so many different clients who, have those gaps, and UN PRI reporting is that extra kind of impetus to make those steps. So if there's a specific GP who is considering becoming a UN PRI signatory or who's just signed up and about to report for the first time, is there some advice that you would give them?
Yes, don't be scared, just do it. Just sign up. It's not that bad. And then in regard to, being the reporting process itself, again, and this is good life advice, right? Like just start earlier, and give yourself more time than you think you need, because it does take some time to go through everything, and the more time that you have to complete it in a thoughtful manner, the better off you'll be.
Awesome. Thank you again for all of the time here. Really appreciate it.
My pleasure.
Alrighty, now we are going to shift into a live Q&A.
All right. Well, thank you all for attending and participating. We've already seen some questions come in on the chat, which we'll start to get through. But please keep bringing them in, and happy to answer any of them now or offline. So starting with this first question, the percent of AUM coverage for the policy. Typically, what we see is firms sign on to PRI and they will run that policy for their current fund and future funds. So typically that would mean when they sign on, it could be, 50%-ish of AUM. And then when they complete that first round of reporting, any companies that are not within the portfolio, or if you're moving on to the next fund, that would then rejigger what your coverage would be. So if 2 years from now, you no longer have any companies in fund 4 and you're only in fund 5 and 6, and you're doing monitoring and diligence and everything that you've outlined in your policy, then you would then get to 100%, even if in your first round of reporting, it was only 50% because you had some of the legacy funds kind of under that umbrella.
Great. I will take the second question here, which is, at what size do GPs typically start thinking about UN PRI reporting? So I would say that it's more a matter of who your investors are and kind of your overall ESG program. That's typically the bigger kind of criteria where we see firms deciding to become a UN PRI signatory. I'd say we do see far fewer GPs that are under $1 billion AUM signing on, just probably given a resourcing kind of criteria. But I'd say that if you have an investor base that's largely based in Europe, or if you have investors or LPs that are largely, very ESG forward, they might have expectations for you to sign on. Similarly too, if you have a more robust ESG program, or if ESG is more kind of core to your firm's identity, then there's going to be a higher likelihood that a specific GP will sign on.
Great. And getting to our next question here, if LPs are asking for and comparing PRI scores against the GPs that they allocate to, at this point, what we've seen is typically LPs are asking if a GP is a PRI signatory. We're seeing some DDQs that will ask for the actual scores across the different reporting modules, but we haven't seen that to be as common to date. And we have only heard of one instance thus far where an LP has kind of set a threshold of where they want their GPs to be with regard to their star score across a reporting module. We would expect that to potentially evolve over time, but right now LPs are really focused on if you're a signatory versus what your score is and how you compare to other GPs that they allocate to.
I'll pick the next one, which is UN PRI reporting difficult from a GP resources perspective? And the answer is yes, it can be, particularly if it's your first year. The UN PRI reporting process can be quite extensive. Definitely does depend on, if you have a number of different assets or different, strategies, because that will kind of increase the number of modules that you'll have to respond to. But, it does typically require kind of coordination across, different departments and different individuals to weigh in. And then, of course, compliance and legal need to review as well. So, having as much support as you possibly can throughout this process is definitely the best way to go.
And then for that next question on timing, kind of related to what Nicole had mentioned, it really depends on if this is your first time reporting or if you've reported in the past. If you've done a gap assessment, that will also impact if you already have answers prepared. And then also how many strategies, thus how many reporting modules. Completely ballpark, it could take anywhere to 50 hours plus, but it really kind of depends on if you're leveraging any outside support, or how many reporting modules that you have to commit to. Great. What's next? Sorry, go ahead.
Taking this next one?
Sorry?
Do you mind taking this next one?
Yes. So for the progression pathways, this is still kind of being formulated by PRI, but what they've kind of aligned to is one of the pathways is kind of focused on if you're an impact investor. So meeting financial objectives while pursuing positive impact takes into account that not all firms are impact investors, but those that are may want to get credit for the work that they're doing or their processes and outputs and initiatives may look different. And if one of them loosely kind of relates to SFDR, so incorporating ESG factors, thinking Article 6 versus Article 8 versus Article 9. They're kind of loosely based on other existing frameworks. PRI hasn't given a ton of detail on what these different levels will be. So it's unclear what level 1 would mean versus level 3. But the intention is firms can then work through those levels as they advance their programs within that particular progression. It's our understanding that this may be optional this year. We haven't seen any of those reporting modules, so can't confirm if that is true or not, but that's what we've heard from them. And then would be something that they would roll out more formally in 2027 on a voluntary basis.
Great. I can take the next one here, which is how do you suggest responding to the private equity module when you have a buyout, impact, and growth asset classes? So yes, the private equity module does kind of take on quite a lot. It really depends on the specific question, I'd say. So there are opportunities if you have, a specific, portfolio engagement initiative that only covers private equity and not growth. Typically, there's an option to, indicate what percentage of AUM within that asset class is covered by that specific initiative. There's also a number of free response options throughout the private equity module. And so if there are, ways in which your kind of strategy is differing and, it isn't necessarily clear from the question, there's an opportunity to kind of disclose that and be as transparent as possible that there is that variability. But yes, there's a lot of different investors that are going to have to tackle this module in that way. But fortunately, there are ways to go about that.
Great. And then this next question is asking about best practices in terms of sharing this information more publicly. Completely agree. The reporting outputs that PRI puts out is honestly not very easy to share because it's just a lot of text and how you answer a certain question bolded and colored. So not very user-friendly to share publicly. Typically, what we're seeing kind of ranges based on how public a firm wants to be about their scores. So for some of the questions within the reporting modules, you are allotted more points for having information public. So for example, your ESG policy, if you have your entire ESG policy shared publicly and it hits, 8 of the 12 points, then that really demonstrates all the areas that you're kind of showcasing and the initiatives that you have within your program. So that's one way, is having some of your policies and processes shared publicly. We also just see the PRI logo in a lot of places. So having it on your website, if you have a public ESG report, any other kind of LP reporting materials that you may have, including that logo to demonstrate that you are a signatory. And then I'd say kind of last point there is, if a firm is really proud of the score that they have, is to share that in a press release or put it on their website. I'd say that isn't super common, particularly because you're graded on a score against your peers, and if you get 5 stars one year, but maybe you get 4 stars next year because your peer group has changed or maybe your internal program has changed, there's some hesitancy and potentially sharing that. But once you do share it, you'll likely get more questions about what that star score is going forward. So there really is a range on kind of sharing your actual materials and policies and processes publicly, all the way through actually sharing the score that you have across these reporting modules.
Okay. I don't think that we have any other questions, but definitely please reach out if there's anything that comes up. And, if you're looking for support this coming cycle, definitely encourage you to reach out sooner rather than later to kick things off, because the summer season is always very, very busy with UN PRI reporting. But we have our contact information kind of throughout, and yeah, definitely reach out, and really, really appreciate everyone attending here today. Oh, looks like we actually do have a question. Let me take a quick look.
It's looking like if you participated in mandatory reporting 2 years ago, but want to get ready for reporting this year, well, looking at the last report still be a good way to prepare. So if you reported in, then I'm guessing 2023, yes, the report should be very similar this year. Checking against kind of the changes to the reporting modules, very few questions actually changed. So definitely not a complete waste of time. I think it would be a great place to start. And if anything, depending on how significantly your programs change, likely it's more small tweaks than completely scrapping questions and having to start all over. Perfect.
Awesome.
Great. Well, thank you all so much. Definitely feel free to reach out if you have any additional questions to Nicole or me or other members that you have worked with at Malk. And we'll look forward to sharing additional materials related to PRI in the future.
Thanks all.